Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Robert Korn. Robert is the President and Co-Founder of Carlyle Aviation Partners. He's joining us for the purposes of our Aviation Leaders Report 2025, and we're recording this in mid-October. Robert, thanks again for joining us. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about Carlyle Aviation Partners?
Yeah. It'll be great. Thank you very much. So we're in our 23rd year. Carlyle Aviation Partners today has 120 employees based in 3 offices in Miami, Dublin, and Singapore. We have roughly $12.5 billion of assets under management, which includes 400 commercial aircraft on lease to about 110 global airlines. We have a small order with Airbus. We provide financing for pre-delivery deposits for our customers, as well as we manage securities for a host of international insurance companies and banks.
Super, Robert. And maybe we'll kick off looking at airline performance. Can you talk to us about the demand environment you're seeing and just how that splits out geographically?
Yeah. Well, I don't think there's a real geographic split in the sense that there's demand coming globally, and we're really aware of that. There's I'd say if there's any area that had a significantly higher demand, you could look to Central Asia, you could look to Southeast Asia as areas that I think recovered from COVID second after the US and Europe, so therefore didn't start taking aircraft as quickly as the US majors and the Europeans did. But we still see a very healthy demand environment.
And can you talk to me maybe then around, as we look out into 25, do you have concerns, whether that's on the geopolitical side or the macroeconomic?
Gosh, I don't even know where to start with that one. I think we have lots of concerns. And when you think about the macroeconomic environment, I mean, first of all, we're weeks away from an election in the United States, which I think is going to have a significant impact one way or another on the world and the global economics and trade environment. We're certainly worried about inflation and how that affects our airline customers. I think we see the reaction to inflation in that the cost side is catching up very quickly with labor costs, and MRO are at overcapacity. We see the supply chain still struggling to support MRO activities with spare parts. So all of these things put pressure on the airlines and their cost basis. Ultimately, we all rely on the airlines for our success, so we have to worry about their success. They are facing unprecedented geopolitical situation. There's not a calm area in the world right now, and so these are things that we're constantly worried about as we operate, in 55 different countries today, let alone the countries our customers operate into.
Yeah, and one element, obviously, is the demand side strong, but concerns. If we look then maybe at the supply side challenges that have been very significant, obviously as we chat now, the Boeing strike is still ongoing. How concerned are you in relation to the supply side challenges?
Well, I think it's front and center to our concerns, and it's certainly allowing for lease rates and for aircraft costs to remain in buoyant levels. But at the same time, many of our customers are struggling to get the aircraft they think they need to deploy into the marketplace. And therefore, it's having a chain reaction that they in turn are then looking to extend leases, and in many cases longer than they would have wanted to. So it's creating a lot of challenges for the airlines, for the lessors, for the OEMs, the entire system, to rationalize how the aircraft are going to ultimately end up, in the fleets.
But how do you see it uncorking, or do you see it uncorking in the near term?
I don't see it uncorking in the near term. I think, hopefully, I think we'd like to believe the Boeing strike is just a small, quickly resolved, mutually beneficial solution for the company, for the workers. But in aggregate, we haven't addressed that there's still a supply chain issues. There's lots of things that go into building aircraft. There's millions of parts. These are not simple machines to put out and deliver. This is not a simple process to build a new aircraft and a new engine. And so we have to recognize that post-COVID, where we had massive retirements and massive retrenching of the supply chain, that this isn't going to be resolved overnight. And they still have a lot of catch-up to do, and they have to build up to these unprecedented levels of deliveries that the airlines would like to see them achieve. So I think this is at least a 3 to 5 year situation where we're going to see the fleets being lacking in aircraft that they want.
And as an owner of 400 plus aircraft, a very significant lessor, how do you view the supply side challenge in that, you talked about the positive impact it can have on lease rates, maybe asset values, but is it more worrisome over just your ability to drive profitability or grow out the business?
Well, it certainly makes the acquisition a bigger challenge than it would have been. At the same time, with higher prices of aircraft, it certainly creates more trading, and because the lessors and the airlines that are looking to sell are obtaining prices that are higher than they would have expected, just because of increased views of residuals. And then as interest rates start to soften, we hope that'll even add to the trading environment. We are in a mode, as always, where we're looking to be acquiring aircraft, which is a bit of a challenge. We're managing aircraft, which the airlines are doing well today, and that makes it a little bit easier. And then we're selling aircraft, and we're selling aircraft into a market that seems to be rather exciting to be doing that today.
And maybe to pick on that trading point, if we were having this conversation a year ago, and in other times we would have talked a bit of a stodgy trading market versus maybe where we were pre-COVID. How have you seen that trading market evolve over the course of 2024?
I think our team would tell you how pleased they are with the marketplace in terms of being able to trade. There's quite a few more opportunities coming to the market, but we are seeing buyers executing, performing, constructive. I think, when I look back at this industry and this trading business, which we've been participating in for over 20 years, it's one of the healthiest environments that I've seen, and it's the most sophisticated. I always worry that, is there enough capital in the marketplace? And it's something I'm always worried about. But today, from our perspective, there's enough capital out there that we're able to complete our transactions.
And maybe to pick on two elements that you've touched on briefly there, which is probably around lease rates and interest rates. So we've seen a material rise in lease rates. I want to get your thoughts around how much that's been driven by interest rates versus the supply-demand dynamic. And then we might just get your broader outlook on interest rates.
Well, so certainly interest rates, especially in the newer area of the business, have had a portion of the increase. I think the demand supply imbalance has benefited as well. I'm not sure how I would break the two out. On the release market, it's simply a supply-demand equation. I don't think there's as much involvement in it. The financing cost, I think, the financing cost is certainly something that we worry about. But really, we've changed from a market during COVID where it was lessors competing in a knife fight to place that one aircraft at that last customer, to the complete opposite, where we have airlines competing for aircraft that I haven't seen it in a cycle. So it's a very different environment today. And I think that's going to persist for a few years. In terms of where do we see forward-looking interest rates, I mean, I think we're in a higher, longer environment where we've been. We certainly entered last year thinking rates were going to come down a lot faster than they did and didn't come down. I think this year, even leading up to the last few months, there's been a lot of speculation that there'll be continued cuts as we come towards the end of this year. I think the market is less and less expecting that. And we just have to run our business in an environment where we can't anticipate and invest based on an expectation that rates will come down.
Yeah, and then more broadly in relation to the debt market, your assessment on the health of the overall aviation debt market?
Well, I think it's certainly improving. I mean, we've been able to, as a firm, source over $2 billion of debt this year so far. We are extremely pleased with the market's reception to the reopening of the ABS market, which we led. I mean, we just completed a second transaction in the last few weeks. We rely on the ABS marketplace as a real go-to place for us to do business. We're the most prolific ABS issuer. We've issued 16 transactions. And one thing we learned during COVID, or I should say we employed during COVID, we knew it ahead of time, is, in good times, you want to do lots of different types of transactions. You want to build the ability to deploy debt into many different ways, whether it's through the banks, whether it's through the non-bank private capital, whether it's through the ABS marketplace, or by issuing bonds into the marketplace. Because when you get to a bad market like the bottom of COVID, you still want to be able to find some way to finance your portfolio, which we were able to move very rapidly and tax bonds, bank debt, and private capital during COVID when the ABS market closed. I think the overall market is returning to health. I'm very pleased to see an emergence of private capital providers, sponsored by many of the big private capital providers like KKR, Apollo Global, even Carlyle is starting to grow in that area. So we desire to see the market continue to grow, because as deliveries peak later in this decade, there's going to be requirement for additional equity and additional debt.
Yeah, and to pick up maybe a thread of that around ABS, as you say, a market you guys are incredibly familiar with and have tended to be, after whatever lull it is, one of the first back into it. Can you talk to us about going back into that market this year, where we had that post-Russian, post-interest rate hike lull in the market? It seems to be properly reopened now. Can you talk to me about, I guess, how challenging or unchallenging it was to get those transactions away this year?
Well, I don't want to understate the challenge or the complexity. I think there's a reason that we went first, and I think it's the fact that we have a demonstrated track record of performance, of paying off transactions, of the way we interact with the market's investors and demonstrate our commitment to repay these transactions, I think has resonated, right? I think the fact that we're a serial issuer, that we're a full service platform, that we've stuck with these transactions through COVID means a lot to the investors, and I'm not sure that other platforms uniformly would have been supported the way we were. I don't think it was easy. It required a lot of work, a lot of thoughtfulness. We collaborated with Goldman Sachs and with the other banks on the transactions, and I think at the end of the day, they performed along with our team and the portfolio.
And maybe moving on to the investor class, Robert, have you seen any interesting trends over the last year or so in maybe the nature of investors that are coming to aviation finance?
Well, I think what we're seeing, if picking that apart, starting with investors as a whole, I think it's I'm not speaking out of turn to say that as interest rates go down, as businesses pick up, values increase, and therefore private equity exits are starting to increase. We, at the end of the day, are investing in illiquid assets. We're competing for capital in the private equity area. That capital is looking to be turned over so it can redeploy itself. And as we see more and more liquidations in the overall private equity space, I think that'll help generate more capital for the aviation market for all of us. I think last year in particular was a year that not a lot of illiquid capital was deployed into new funds and new investments by the end participants, the sovereigns, the pension funds, the insurance companies, the asset managers. You roll forward and separate out into just aviation, and that's work that the Carlyle Group as a whole does around the world and across various different industries that we're interested in. So I do think, in summary, the industry continues to recover capital, continues to find new investors. I don't know that the class has changed, but certainly from where I saw the industry when we started this business in 2002 to today, we've seen an incredible maturity in the business itself and in the capital providers.
Yeah. And I guess there's a couple of bits I just want to probe at there, because you've had an outsized impact from probably the pandemic and Russia and aviation finance, but offset by the resilience the sector has shown. Do you think aviation as an asset class is more or less, or has the same level of attractiveness as, say, it did in January 2020?
Well, I think that there's an answer to that question that might be different in January 21, 22, 23, 24. And I certainly think as we come to January 2025, I really believe that a significant majority of the people that had concern from January 20 and into the depths of COVID and then Russia, most of them are coming back and saying, okay, look at this. This business has virtually fully recovered. Demand has recovered. It's a much more resilient asset class than we may have thought at the bottom.
And Robert, maybe shifting gears, can I get your thoughts around the sustainability agenda and the impact, or not, that's having on your business?
No, it's quite significant. It's definitely a conversation that we're really having. It starts at the top of the Carlyle Group, where it's a very big topic. There's a strong belief that engaging in the companies and the activities that we own as a firm drives increased values and therefore better returns for the investors. It's important in the aviation industry because of the airline's commitment to net zero emissions by 2050. So it's also important to our investors who are asking these questions and who are talking to it about sustainability to all of our competitors and to our colleagues in the industry. So it's something that we've become quite involved in. We're going to participate in 2025 in CSRD reporting through our Dublin office, which is something that the entire Carlyle Group's working on. And so we've had the opportunity to get quite involved in talking about sustainability. I was actually attended and spoke at the IATA Sustainability Conference in Miami a few weeks ago. Carlyle Aviation is very focused on our fleet progression and how the investment dollars we're making today are becoming more and more slanted towards investing in new technology aircraft. As a financier of the airlines, we don't create new technology, right? We can invest in and are interested in new technology, but it's the OEMs that have to drive that technology. We're in an environment where we're undersupplied, as we just talked about. So the idea of early retirements of aircraft, where we get polluting aircraft out of the system prematurely, I think is something that we really should focus on. But areas such as SAF, where the industry is very focused on SAF, and Carlyle has significant investments and is putting even more significant investments in CapEx in the fuel companies that Carlyle owns that are already producing SAF for the airlines to create more capacity, is a great example of how the Carlyle Group is financing the energy transition, right? We, as a firm, Carlyle Aviation, are a big believer in that, and we're also working with and looking at new products and new technologies, whether it's hybrid, whether it's electric, whether it's simply ways that the existing technology of aircraft can be operated or modified to be less pollution emissions active. These are areas that we're very focused on.
Yeah, and that's really interesting to hear, right? Because some of the sustainability agenda points, there's a bit of tiredness, I think, around it on aviation and the SAF point, and I'm very interested to hear you guys investing within it. It seems such a hurdle to get to that mass production level, and that's going to be a huge challenge. Maybe shifting gears and bringing it back to the leasing market. Robert, you guys have scale, you've got a lot of scale. Do you think scale is of increasing importance in a world where you've got supply constrained considerations to factor in?
Yes, I'm not sure I would necessarily tie it to supply constraints, but look, when we started this business, and I said it on the last question, 20 plus years ago, it was easy. You just drafted a lease, you bought an aircraft, you put it out on lease. The things we think about, worry about, our investors think about, we worry about today weren't necessarily as applicable 20 plus years ago than they are today. AML, KYC, SEC registration, sustainability, credit and collections, all of these areas, lease management, the tools, the processes, the procedures that a large platform can employ can't be invested in, can't be managed in a small platform. You can't provide the same ultimate result without the scaled opportunity. I'm a firm believer in that. And I think we can deliver a better solution, a better management because of our scale that our smaller competitors simply can't do because they don't have the fees, they don't have the revenues to invest in all those different things that we do.
And if you take that position, then the logical follow-on is probably more consolidation as people try to build up to that size. You guys have made strategic acquisitions, whether it was an AMCK or the Fly transaction in recent years, and probably the trend line has been that sub 150, 100 aircraft kind of platform that's been generally swallowed by a larger one. Not a massive amount of transactions, but enough of them. Is that something you expect to continue?
I'm not sure. I believe the larger lessors are going to continue to grow larger. Whether it's through acquisitions, it's through fleet ordering. I'm not certain exactly how growth will occur. Certainly, there's a lot of aircraft that are ordered by the airlines and owned by the airlines that can transfer over to lessor balance sheets. There's a lot of trading that can occur. It doesn't necessarily have to be strict corporate M&A, but I certainly believe when we look at the top 15 lessors today versus 20 years ago, the fleet, I think, has grown on average 2.5 times. I don't see anything that shows me that trend is in any way going to change going forward. So do I think Carlyle Aviation is going to double in assets over time? Yes. Do I necessarily think it will double in airplanes? Not necessarily. I don't think that's necessarily what our goal is. But I do see us growing as a firm because these assets are becoming more valuable. We're buying higher priced assets as we buy newer aircraft. We're growing horizontally by adding lending with our PDP product. So I do think by us growing and creating additional depth of management and systems and tools, we will continue to become a better manager and a better partner to our investors and to our airline customers. I believe our colleagues in this business think similarly. So I think with a lot of really bright guys running these big businesses, I think we're going to have to see growth. How it happens, I think we'll see that in the future.
Robert, excellent insights as always. I usually like to close with this question as we look out into 2025. What are your optimism levels like?
Well, in one respect, I'm very optimistic. I think we have a very, very resilient business. I think we have a great platform. We have a great sponsor in the Carlyle Group. We have a lot of good people in our business that are driving the business. We all worry. On the other side, I worry about geopolitics. I worry about the profitability of the airlines. I worry about inflation, right? But I think all in all, really smart people figure out how to navigate really tough times and really big problems. And we don't have tough times today. We have a great world out there. We will find a way forward. And I am really excited about 2025.
Well, on that very positive note, I'd like to thank you for your time and insights as always, Robert, and wish you and Carlyle Aviation Partners a very successful 2025.
Thank you very much. Thank you, Joe.